What is the concept of a unified exchange rate, and what does this mean for the economy?
So, I mean, basically, a unified exchange rate is an exchange rate that reflects the price of another currency. It's an exchange rate, how your currency will equal another currency. So, the challenge with this is that countries can have more than one exchange rate depending on the circumstances that they find themselves in. Why a unified exchange rate has really come into limelight in Nigeria is because we have had more than one rate effectively. I mean, there's the official rate, but then there's also the other rates that the CBN provides for specific segments and sectors of the economy, ostensibly because they have special or unique needs. And, because of that, they want to provide this forex, at a particular different rate. The problem with that is that if there is still another rate, which, most likely is the case, where you have a thriving black market, you will have multiple currency practices in a country. And the problem with this is that the margin between the rate the bank holds, and I'm assuming that this country has a fixed rate, the difference between that rate and the black market rate, it spells a loss for the country. The World Bank, in their calculations, stated that between 2015 and 2022, Nigeria may have lost close to 13 trillion naira as a result of the differences between CBN's official rate and the parallel market rate. That's because of the arbitrage, that goes on by people who obtain forex from the central bank and go ahead to buy, or to make purchases or to carry out their business, as it were. Coincidentally, like the previous segment where we're discussing the removal of subsidy, one issue that Ipman even raised was that the central bank needs to relax the forex regime and allow easier access to forex, so these independent marketers can have access, to these petroleum products. But, in a nutshell, a unified rate is just one single rate compared to, a base or comparator country's currency.
Oh, okay, so Charles Fakroha. So let me go to Charles Fakroha now. To talk to us about what are your thoughts on this unified exchange rate?
Thank you very much. Yes, I will start a little bit ordinary. Unified exchange rates. Yes, in fact, it is not possible anywhere to have a unified exchange rate. That is one rate for people to exchange one country's currency for another. Even in the FMBQ, where the naira is traded, you will see daily fluctuation. However, what we are saying, in that FMBQ platform, there is a range that the naira can fluctuate and people can buy and sell naira at that rate. Like the previous our colleague said, parallel market is there. The difference is so high, and that is a real problem. And for me, before even talking about unified rate, that is what the government should do, to see that the difference between the parallel market and, of course, the official rate is not so much, so that it will not encourage a lot of arbitrage. And that is what is the issue. People who are in need of this forex will not be able to get this forex to do what they are expected to do. Now, coming to the capital market, of course, once your exchange rates is having issue, okay, for you to now change, that means investors will have less money to invest in the capital market, because if your exchange rate you used to, or those foreign investors who are coming, of course, it's going to favor the foreign investors if they used to change before maybe 460 naira per dollar. Now, when they come and the rate has gone up, so they will have more cash to invest. So in a way, it might be encouraging the foreign investors. What about the local investors? It will be a problem for them.
Okay, let me come to our studio here. So Ambrose, let's hear you. Let's hear your take.
Actually, for me, it's a welcome development to have a single exchange rate, but it's not just overnighting. Like I said, everything has process, and also there is also procedure. You must follow that process and procedure. At the end of the day, you achieve desired goal. Yes, if you want to go into an exchange rate, it's not just by fixing the exchange rate. Do you have all it takes? Like I said earlier at the beginning of the day, do you have all it takes to boost your reserve to meet what you want? Because if you put one exchange rate, fine, and the manufacturers are demanding for so early to bring import goods. Those that are in air service, the airlines are demanding for it, and also those that want to import fuel are demanding for it. Do you have enough? That means for me, thinking of it right there, it's a good idea, but we need to boost our source of earning the foreign reserve first, the exchange first, so you can have hard currency within the system. And also, don't forget that we are not a dollar economy. We are also a naira economy. So that people, when we're talking of exchange, that is not the focus. It's just because for us to encourage, international trade. But let's do that. What we need to make economy thrive there are there, and that also by encouraging export. And export by means we are going to encourage all those that are into farming. The value chain should have value. And export. You can see that before a company like Julius Berger will go into producing a cashew nut. You can see that they have same value there. This is so that when they export cashew, the currency is going to. That means we need to do more, and especially in Nigeria, that our source of revenue in terms of hard currency is oil, and we are producing less than what the OPEC has given to us. We can't have reserve here. That means for us to really boost our earnings, we need to increase our output so that we can earn more. Then, if you are going to agree unifying exchange rate, any foreigner that's coming to, I know that I'm coming at 5 naira, 510 or 560. In the next 5 years, it will be within that range. That when it's coming with this amount, going out, going to at 800, all his effort in the economy has gone.